This ETF is a small cap bear 3X. And small cap has a way of having corrections and bull rallies. And small caps are great stocks to buy and hold at times in rallies. And so we're going to be looking at this small cap bear 3X, and we're going to want to know why we break out and where the bigger breakout would come. The range on it, just so people can understand that, is $2.04 TZA, 2.04 range. Okay, so the dollar beta, the SMF 2.04 ratio, is our dollar beta for buying off the lows and bouncing off support levels. So basically on this one here, on the daily, is if we close above this 10-day rising simple moving average and this MACD continues to go toward a buy signal, when that daily MACD hits that buy signal, that's a daily buy signal that the public uses. And basically we put in the bottom when we started the correction here, we have pulled back. Where does a bigger buy through happen? Is as we go through the key daily moving averages and the other side of the market is selling off in the small cap bear, we're going to break out higher. When bull rally is pulling back, short-term bear rally moves, 1 day, 3 day, 5 day, and directional price movement happen. MMTs, I had to bring up the SML.X CBO S&P Small Cap 600 because the bear ETF right here is Small Cap Bear 3X. So in order to make trade management and identify where sell programs are going to occur and where buy programs are going to occur, and it's my duty to show you that if I'm selling down in the broader index itself, then this bear, this small cap bear 3X is going to break above its moving averages, and this is going to come down and test these moving averages. The thing about this small cap bear right here, SMLX, is that when we put in the top, just like we did over here back in April when we were shorting it down, then we put in the bottom and we made another new high. This is what happens in bear and bull rallies. Small cap, bear and bull rallies. Small cap correction, small cap counter trend bull rally, correction, and we're in another correction. So we had one big down day, 2, 3 big down days, then we hit a bottom here at 440. Then we had the volatility with the markets. We popped up, but notice that when we popped up, MMTs, that because of this original reversal right here, that's reversal 1, reversal 2 is right here. They come up in the volatility because that's the 4-day upside volatility to the original reversal. Now we are making bigger sells on the daily, and the moving averages is the 10-day moving average and the 20-day moving averages is our, when we sell down to hit support here, we look at if we start to bounce and the volatility is here to stay. So this is a very good trade on the small cap. So if the small cap comes down and wants to bounce, then that means that the bear is going to sell off into what we call resistance, right? So let's take a look at the upper end of the bear resistance. Now, if we bounce on the other one, this is the bear, that means that these key simple moving averages here is the 50-day, is that we're going to come up and hit that. And if we break through that one there to the long side, the 50-day moving average down here on the index here. So let's take a look at the moving averages. 50-day moving average over here, 50-day moving average over here. We come down and we bounce hard. That means that this could come up and go through it intraday, but if we start to bounce here and we're long, we're going to take our profit, because then the small cap index itself, the broader index with all the names in it, are bouncing off the bottoms in volatility. So you got to know when to be a seller. However, if we break this one here, then this one here is going up toward $40. That's the 100-day moving average. The 100-day, and that's this line right here. See this color? So if we break through and get a good sell through, and that's the 100-day moving average support here, and it's also the 100-day moving average resistance up there. Just remember that what side of the market. So if this is selling off, that means that buying this at support on the intraday open at the drop down bid, they're going to bounce. So we're looking for a breakout through the key moving averages. There's a trade, there's a $2 trade right up here, because it'll come right up above it and either sells off, and this one breaks through. So how do I what am I going to do? I'm going to gauge how I can let my longer term trend work. 1 day, 3 day, 5 day. 1 day, 3 day, 5 day price action. And where do breakouts occur and why? And why do people move in? Because it's above your simple moving averages. Remember, your fund managers, hedge funds, institutional people, the bigger people are going to be looking at that. So if they take the stop market orders below these moving averages, we're going to break higher here. Once again, this is the daily chart, small cap 600 with the TZA small cap bear 3X. We'll be taking a look at the mid cap and the large cap one so that we have a complete way. So we'll have a bear ETF for all of the corrections. We are in a 10-day yearly high correction. Next week, price volatility will increase both in bear and bull cycles. There will be certain areas that we sell down more in the indexes, which will support the intraday entry on the lower end of the bear. So when we have volatility gap, so if we got a gap up in the futures, they're going to gap the bear down. Why will the bear bounce? Because the gap sells, the bear bounces off of there, and I'm yielding out my trade management risk reward ratio based on where we're at and the broader 10-day indices, indices, corrections that we called for. This one here is a great movement. They got great bounces, this TZA. $2.04 from the bottom up range at 3.91% net change. 15 million shares qualifies. Historical volume is 15.8. It was burning just a little bit less. Take a look. 52-week low, 31.58. The intraday low on Friday, 33.36. Here's the high, $2 and some change. How do I know to apply a trade using the instruments based on each trend on each side of the market? Special series, again, wonderful move off of the bottom. So we want to just be mindful that when they bounce, why are they going to bounce off of the bottom? Okay? And why is the small cap index? You can see them both here. And small cap has done well. We like it. We like to buy long in once the correction is over as well. And small cap leadership. And there are a lot of good ones.